It's Thursday, January 5th, 2022. Markets closed a few hours ago. I'm going to recap on that. Let's recap on what's happening to the U.S. economy. Things do not look good, ladies and gentlemen. Today, Dow Jones closes down 340 points, NASDAQ down 153, markets across the board down. The labor market, we got data that the labor market is still strong despite the Fed's interest rate hikes. Now, whether you believe the data or not, the data may be completely manipulated, completely inaccurate. A lot of people will argue that. You can't disagree with that now. These numbers that they're throwing at us, I don't know what to believe at this point, but what they're saying is the labor market is still strong despite the rate hikes. This now is going to give the green light, because this is the data that the Fed is going to use to justify the green light to continue raising rates throughout 2023. Now, I think the market should have been down a lot more today because we've got more bad news. The data it's getting so bad. They can manipulate it all they want, but they're having a much more difficult time sweeping it under the rug because they cannot cover up what's happening to the U.S. economy. The hedge today, U.S. services, PMI in contraction for 6 straight months in December. So we've had 2 months of contraction in U.S. manufacturing, now 6 straight months of contraction in U.S. services PMI. Here's one from the New York Times. Amazon expands corporate layoffs to 18,000 jobs. Before it was 10,000. Now it's 18,000. 18,000 could go to 20,000. 20,000 could go to 30,000. These numbers are going to continue to increase in industries across the board. And this is just another canary in the coal mine. We know that the global outlook continues to worsen. Global debt exceeding $300 trillion. We are going to see, I believe, a global depression. Many countries are so broke, so in debt, they're not going to escape the massive depression that is coming. Here's one from CNBC. Crypto lender Genesis trading lays off 30% of workforce. They were hit extremely hard by the collapse of FTX. That's another layoff. I really do believe, to see the Dow Jones only down 340 points and the NASDAQ down 153 points, it should have been so much worse today. Just listen to some of these articles and the data. And as manipulated as it is, I believe it is much worse than any of us think. Bed Bath & Beyond shares plummet after company warns of potential bankruptcy. Today, Bed Bath & Beyond down 30%. In the past month, down 50%. And they warned today that they are running out of cash. Where did all the money go? Remember when these companies were borrowing money for next to nothing? What were they doing with it? Well, they were buying corporate buybacks. They were buying their own stocks to juice up the prices of their stocks and have no cash saved up, have no cash reserves, and now they're broke. And now you're going to see Bed Bath & Beyond probably next week file bankruptcy, close a lot of stores, lay off a lot more people. So why weren't they putting cash away for a rainy day? Instead, they were just juicing up the stock prices and completely unprepared for a slowdown in the economy. And they're not the only ones. More of this is going to be exposed. Many companies are not going to survive this economic depression that we have begun. They don't have the reserves. They don't have the cash. They're not prepared. The party's over. The Fed has stepped away. The easy money is over. They've pulled the punch bowl away. Interest rates are not going down. They're going up. Another one today from the hedge. U.S. trade deficit unexpectedly plunges in biggest drop since global financial crisis. We had a 20% drop in the deficit, a 20% drop in 1 month. Now, this sounds great. It sounds wonderful. And it would be great news if the drop in the deficit was the result of a surge in exports. It was not. The plunge was not the result of rising exports, but rather shrinking imports. This is a telltale sign, ladies and gentlemen, of an economic slowdown. Private payroll growth surged by 235,000 in December, well above the estimate, ADP reports. The Dow Jones estimate was 153,000. The Fed is looking at this, ladies and gentlemen, and they're going to have to take action. They're going to have to get more aggressive. You know, I'm watching these people on the television daily telling us that the Fed is going to pivot. The Fed will pivot by February. The Fed will pivot by the second half of this year. Everybody's coming up with these dates. The Fed's going to pivot. I don't see it happening. I really don't. And the more information that we get like this, they're getting really the opposite reaction that they were expecting. They should be seeing payroll growth plummeting, dropping, not surging by 235,000. We got the jobless claims today, 204,000, well below expected. That's, I believe, around a 25,000 drop from the prior week. And the Fed's looking at that data going, hey, we've got to get more aggressive here. There's no way they're going to slow it down at this point. And what I find astonishing is these people that come on the television, on these financial shows, and say that the Fed's going to have to pivot, they're going to have to reverse course, they're going to have to print money, they're going to have to, they're going to have to lower interest rates. We are in the situation we're in right now with inflation, not because the Fed is raising rates. We're in this because the Fed kept rates too low for too long. And now these people who are heavily invested in these markets, who once told you to be the Fed's friend, who once told you the Fed has your back, well, now they're fighting the Fed. They don't like the Fed now. Now they want the Fed to pivot. And that's exactly what got us into this situation, was cheap money, 0% interest rates for over a decade, the Fed buying mortgage-backed securities, pumping up the housing market, causing a huge bubble, and all of these injections. When you pump $7 trillion into the economy over 30 months, what do you think you're going to get? And these people want more of the same. And by doing that, you're going to get the same results. You're going to continue to get more inflation. But now if you pivot, now if you print and slam rates, you're going to get hyperinflation. You will destroy, I believe, the future of America. You will destroy the middle class. You will destroy the US dollar. They don't care. They want the markets to turn around immediately. I don't think they quite understand the fallout, the fragmentation that would take place, the devastation if the Fed did pivot and slam rates and start printing again and expanding their balance sheet. It would be absolutely devastating to the health and future of this country. Financially, I think we would go bust extremely quick. We would not be a first world nation. The world would see exactly what's going on. They see what's going on right now. But I think at that point, the dollar would be on borrowed time. It's on borrowed time right now, but it would be so accelerated that it would happen so quickly. You would send America plummeting to its doom. Here's one from Axios. Lots of layoffs, few jobless claims. Another green light for the Fed. Only 204,000 people filed jobless claims last week, and this is going to be more problems for the Fed. And people just, especially investors, they realize that by the Fed hiking rates and continuing to hike rates and keep rates higher, that it's going to be painful. And these people didn't mind the party when they were getting free money, when investors were, the institutions were borrowing money for next to nothing, and everybody was making money hand over fist because it was all artificial. It was all these artificial injections, and that was fine. The party was fine. Nobody wants to deal with the hangover. Nobody wants to deal with the end result. And now we have inflation. It's much worse than they're telling us. It's probably about 15 to 18% right now. It could get much worse, but nobody wants to deal with the pain now. Everybody wants to go back to indulging in the party, not worried about the consequences. The consequences would be extremely severe, but there's going to be pain to be felt here, ladies and gentlemen. And the people who caused it now, they don't want to feel the pain, but they're going to. And the people who, over the last couple of years, getting all the free money, all the benefit, all the subsidies, buying the cars, taking the vacations. Now reality has come back to home, and now nobody wants to deal with reality. Everybody wants another check. Everybody wants more stimulus. Pain's coming, ladies and gentlemen, and unfortunately, those people went out and they bought cars and they bought a good time and they kept the party going. They did not spend a dime on preparations. Here's one from Fox Business News. Markets in for rude awakening. Mark Trepper. He was on Mornings with Maria. He is the Strategic Wealth Partners CEO. I think he said it best. I think this is clear. I think what's going to happen is the Fed is going to hike higher than the markets are expecting. The markets are going to be in for a rude awakening. That's it. I don't think I could say it any better. Investors still believe a pivot is coming, and these investors, I think they're so far in, so deep in these markets that they're delusional. They don't see reality any longer. They're living in another world. They're so deep into these markets, they can't even get out, and they cannot even deal with reality. Here's another one. Mortgage rates tick higher as applications plummet. 30-year fixed mortgage has ticked up for the second week, sitting at 6.48%. And look, if they brought them down to 5% next week, 4%, here's the problem. Lots and lots of layoffs. They tell us that there's not a lot of home inventory. I'll tell you what there's not a lot of inventory of, and that's qualified buyers. You're going to see less and less qualified buyers in this market. The inventory of homes is not what's shrinking. The inventory of qualified buyers is what is shrinking. There's more and more inventory coming. More and more home builders are finishing up their projects. More and more people are losing their jobs, and they're going to be forced to sell. And you're going to have people in Airbnb, landlords in the rental business, and just the average person that needs to downsize or sell to move for a job or what have you. Just in life in general, people have to sell. You're going to see more of this and more inventory. Problem is, there is going to be less inventory of qualified buyers. I'm going to finish with this last article coming from Fox Business. Online holiday spending reaches record $211 billion. It says here, retail sales jumped 7.6%. Do you believe this number? Again, a lot of this data, I don't know what to believe at this point. Do you believe it? Now, this does not take into account inflation, but it does say in the article that major discounts is what brought consumers in to spend. Strong consumer spending was driven by demand, and not just because of higher prices due to inflation. It says here, if inflation was factored in, the data would still show growth in underlying consumer demand. I will say this, if this is true, then people are going to get exactly what they deserve, because most people that went out and bought over the holidays probably used a credit card. Many people went deeper into debt. And again, if this is true, and this article is stating the facts, and these facts are true, these people are going to get exactly what they deserve. You know, half this country doesn't have $400 saved up, yet they're out here shopping, buying stuff over the holidays with money they don't have, slapping it on one of the 15 credit cards that they use at 25 to 29% interest. I mean, it's absolutely ludicrous what people are doing right now. They are committing financial suicide. And if they have kids, shame on these people, because you are jeopardizing the safety of your kids. What are you going to do when the credit cards get tapped out, the savings account is tapped out? It's already tapped out. That's why you're using credit cards. But these people just cannot give up the party. And they're just going to do whatever they want to do until it ends. And unfortunately, those people are making the biggest mistake of their life, and they will be the biggest losers of this depression. I'm going to leave it there today. God bless you all. Please share this video. Please like, subscribe, hit the bell notification so you're alerted with the latest, newest videos. I look forward to speaking with all of you very, very soon.